the momentum is at highs, and we don't just have momentum highs in the fast line and the rate of change, but the slow line is now gone positive and is now trending up. So the model says that this move can continue. So all that being said, my overall model for 2026 has been completely obliterated. Okay, I thought I was looking for chop sideways action. I was looking for the market to stay in a sideways trading range up to this week. That was all playing out the way I expected, but this move has blown that out of the water, and I am wrong. We're at new highs, momentum's at highs, we're in an extended run, and any at this point going forward, the model says that we can keep going higher. Even if we look at a longer term chart, let's go to the weeklies, the weekly chart. Let me zoom in here. We see this up thrust in momentum. Look at that. You have this big momentum thrust in a weekly chart. That's very bullish. And the odds are that now that the slow line on the weekly chart has gone negative and is turning positive, along with the momentum thrust in the fast line, the game plan is from this point that, okay, now we've hit the upper Bollinger Band. Some type of reaction is overdue. Okay, it doesn't take a rocket science to figure out that we're short-term overbought and we need some type of reaction to the downside. But that being said, any reaction to the downside from testing the upper Bollinger Bands, having the momentum spike like this to the upside, needs to be bought, because what's most likely at this point is that this slow line gets back above positive as it's turning up. We're looking for that to get back to the positive territory on the 310 oscillator. It went down to negative and now it's turning up. I was looking for it to go further down and get down to say under 100, but at this point it doesn't look like that's going to happen because of the way we had this up thrust in momentum. What's most likely is this up thrust in momentum at some point has a reaction down, but then makes another move up at some point. It makes sense that you have some type of move down and then in the oscillators, and then they go back up. And you really can't consider some type of, it's very advantageous if you look for to short this type of market with momentum making all-time highs like it is at this point. So my playbook right now is basically throwing out the whole sideways range chop action for the whole year at this point. Will it come into play in the future? Could we get some type of rollover back and forth type of market action later this year? I don't know. But the way you have these new momentum highs and you have this upthrust in momentum precedes price. So I'm in the camp that you just have to stay with the trend of the market. You're at all-time highs, you have an extended run, you have momentum highs. This slow line is now turning up, so it's due to get back into the positive. So we got to keep going up until at least this gets up into the positive, and we'll take it from there. So it looks like this corrective phase that we've been in since October, say, has come to an end, and we're getting this massive buying spree in stocks. And it's very advantageous if you try to step in front of a freight train to try and look to short this market. At least have some type of divergence form or some type of double top or some type of formation that shows that the momentum is rolling over and the market's running out of steam. Because usually when a market peaks, the oscillators will show you that momentum is coming out of the market.